What's up, members? Welcome to another lesson. This is lesson 8. And if you're actually on this lesson, I assume that you have actually watched everything, because if you have just landed to this video, it won't mean anything to you, because we're going to talk about the things that we have already talked about. So in today's lesson, we're going to look at defining entries and improving RR. Remember, entries is the stage of execution. So you have to make sure that you have actually gone through everything. So this is actually a very important lesson, because it's where you make decisions to enter the market or not enter the market. So remember, we have two things in Forex. So we have two types of entries. The first one is what we call a risk entry, and we have what we call confirmation. Right? We have two things: risk entry and confirmation entry. Risk entry is whereby you are actually waiting for the market to come in your PIO. As soon as the market taps in your PIO, you actually in, right? You actually in the market. You actually don't care whatever the market is gonna do. You just, let's say, for example, this is your PIO, right? And then as soon as price just tap in your POI, and then you're actually into the market, or maybe you had set a buy order right here, and then as soon as the market is here, you don't care whatever is going to happen, but you're already in. Maybe your stop loss, you have actually put your stop loss just below here, and then as soon as that happens, you're gone, right? You're gone. That's actually a risk entry, because sometimes price might still continue going down, right? That's actually a risk entry. But mostly, the more the risk, the more the reward, right? No risk, no rumble. So confirmation entry is what we have already been looking at, and it's that thing that we said. If you want to get a confirmation entry, is whereby you actually wait for the market to come in your zone, and as soon as it comes there, we wait for something like liquidity, and then mitigation on the downside, and then grabs, and then this, we enter here, and then we push to the upside. This is actually a confirmation entry, and this is actually a risk entry. So you need to be aware of everything. You need to be aware of the pawns and the clones of risk entries and confirmation entries, which one is very good and which one is very bad. And if you might see that this one is actually good, there's actually pros and cons, and this one is also has pros and cons, but we're going to look into them in details. So let's say that currently the market is somewhere here, right? It has actually broken structure on the other side, and then it's coming down. So you have seen the market coming down, and you'd be like, let me identify my PIO, right? My POI. And then you've actually identified your POI. And then the next thing you do is you set a buy limit. Like here, you set a buy limit because you're actually waiting for the market to come in your, say this, you're setting a buy limit here. Yeah, you set a buy limit here. I want to use a different color. Yeah, your buy limit here, and your stop loss here, right? And then as soon as price comes in your zone, boom, that means you're in the trade, right? You're in the trade, and then the market might do whatever it can do, but if that trade plays out, you're going, right? So it doesn't matter whether the trade has it doesn't matter whether the price has stayed so long, has stayed a few minutes or whatever, but this has actually happened. This is when the strategy becomes, I mean, this is when this risk entries become so nice. But the only challenge is that you might actually have a very big stop loss, right? You actually have a very big stop loss whereby you can have 20 pips or 30 pips stop loss, so which is actually not good. So you don't have to expose amount, um, all that amount just like that. So the whole purpose of this video is trying to refine your entries and improve your RR. So you're actually going to choose on your own which one is going to be better for you. So because you need to understand the risk that comes with it. So let's say currently the market is going up, and because it's going up, it has actually breaking structure on the other side, and you've actually identified maybe your RR, I mean your PIO, your POI, PIO, anyway. But then the market comes in your zone. You're not yet in. What are you waiting for? You're waiting for confirmation because you don't want to like hold the market for too long, right? So, and then you see this mitigation, then mitigation on the upper side, and then you've actually seen your you've actually now seen your confirmation. The next thing you do is you identify your small PIO in there, ready to take a trade, and then the next thing you do is you take a buy, right? Remember, your stop loss is just always above this level, and then push. So you can see that here you're going to have a big RR, you're going to have a small RR, you're going to have a big RR, but you're going to have a big stop loss, and then you're going to have a small stop loss. This is the good thing of refining your entries. This is just advantage and disadvantages. So yeah, you should also consider that. And then that's the first advantage. This one, whatever happens, I mean, this is actually, I mean, these are the first differences. This is what you call risk entry. This is what you call a confirmation entry. And then let's see another thing, why confirmation entries um, are not good. Let's say this is your PIO, right? Sometimes market can come, right? So like that, and then leave, leave, right? Without playing out to give you a confirmation, without playing out to give you that nice entry, right? So you need to also to understand that chances are very high that you're going to be missing trades. But whenever you take a trade, it's a sniper, it's a killer, right? Because that's part of discipline. Whenever you take a trade using the confirmation thing, it's gonna work so good, and you actually be happy with it because you're going to enter with big lot sizes and you're going to risk small, right? You're going to risk very few. But if you go risk entry, you might enter big lot sizes, but you're going to risk a lot. So the drawdown is going to be big, and is going to affect you. So you need also to consider that. So now let's look at how do you define this RR, right? How do you get this perfect? How do you define your RR? So you need to be ready to the truth that sometimes the market might not tap in your RR. It can just leave. Sometimes it's gonna come, but whenever it comes in your RR, if you happen to miss that trade, if you happen to lose that trade, you're going to um, what? You're going to have lose less, and you're going, if you happen to make money, you're going to make more money because you're going to have a big RR. But if you're going to lose, you lose less. On the risk entry, if you're going to lose, you lose a lot of money. And if you're going to make more money, if you're going to win, you're going to make more money as well. But yeah, so the first thing in refining, so I'm actually removing the risk entry because that's not the purpose of today's video. We're not trying to talk about something risky. We want to talk about something that's been tested, something that is confirmed, that has a system of, I mean, a series of system for you to do certain things. So let's look at the confirmation entries. What is it that the first thing that you have to consider in the first place when you are looking at um, refinement? Um, you need to you first look at 4 hour. So you need to consider the 4 hour. Sorry for that. You need to remember we already say that whenever you are looking for an order block, um, because the most important thing in the first place is to look for an order block. So you have to make sure that your order block is below. I mean, your select all the order blocks. Yeah. So you need to consider all the blocks that are below the 51, that are below the 61 fib level. This is 61%, right? And then the next thing that you need to do is always important to go on to do this on a bigger time frame, like the 4 hour, because if you go on the 4 hour, you're going to have actually a very big uh, um, market outlook, or like what is happening. So you should always look, what's happening. So the hour for you to look for that perfect order block. So on the 4 hour, just consider the last order block. Okay, just consider the last. All right. Anyway, so you should consider the last order block, and then let's move forward. So when you consider the last order block, what you need to do is make sure that, okay, I think we should go on the charts and do these things so that we can actually make it quick and simple. So on the charts. All right, so let's give an example of this trade. Okay, let's give an example of this trade. Okay, so let's say on a 4 hour. Then we're here with this pair. I may not consider the 4 hour, so I'll just go on a 1 hour because I don't want to lose what we are doing. All right, so let me remove these things. All right, so if you can see that in this case, if you look on the 4 hour and then consider an order block, we're going to, when you take a fib from here, right, to let's say this level, right, this level. Let's consider anything that's below the 61. We're trying to refine so that we can get a perfect entry. So this is actually our order block, and then we can remove the fib and then go on a 15-minute time frame. We just want to make sure that we refine our fib, we refine um our our PIO as soon as possible. So you can see that in this case, you might see that this zone, this is actually very, there's a very important zone here. Somebody might consider it, right? And then there's another important zone somebody might consider it, which is this one. And then always the last part. No, let me use this thing when I go on a smaller time frame, right? So this is actually very important zones, this one and this one. So you can see that the first PIO has been not respected. So we're going to go deeper until we get that perfect PIO, right? So if this one doesn't work, remove it. We're actually defining the entries. We're actually trying to find out which entry is actually good. Okay, so in this case, this might be our perfect entry, but always remember the bottom is always very important because that's part of our discounted area. It's part of our discount. So we're going to remove this. So we can even go on a smaller time frame, 1 hour, I mean a minute time frame. The purpose is just trying to look for a perfect zone where we can actually take our trade, right? So yeah, this is it. Okay, and yeah, we can consider that. So that's actually our perfect entry. I mean, that we have actually defined our setup, and that's actually our point of interest where we're looking forward to take a trade. So if you're going to do this and then come in with your buy, let's say you're looking forward to take a trade here, and then you bring your stop loss somewhere there, and then you're going to have that, you're going to see that you have a bigger RR in terms of profit maximum. Then you can go on a 15-minute time frame to see how you're going to maximize on this trade. Okay, so you can actually see we have an RR of how many? 18, 1 to 18, right? Why? Because we've actually spent time looking at refining our entries. So it's very important for you to actually refine these entries. The only good thing is that you're going to be able to see how many pips you're going to hold, how many pips you're going to whatever. That's actually a nice thing. So let's also look at the same example, but in a different aspect. Let's say this is your point of interest, right? This is your point of interest. Probably it should be up to down here. So let's look in a scenario whereby you want to take a risk entry, and then you'll be like, I'm going to take a trade. I'm going to take a trade as soon as the market comes here, and my stop loss is going to be just below this level, and I'll be looking forward to capitalize in this zone, right? So you can see that in this case, this is actually a 1 to 6 reward ratio. You're going to lose 1 in order to make 6. So if you lose $10, you're going to make $60. And then that's actually good, but your reward ratio, you're going to have a very big time holding your drawdown. Okay, but if you had actually waited for a confirmation, um, you should be considering entering your trade here after the mitigation. So you can see that there was a very nice confirmation here, a very nice confirmation, and then until you have this mitigation, right? And as soon as that price broke to the upside and actually gave you a very nice pullback, and then you could enter this trade. Okay, so you should also consider that if you keep on refining, you're going to see that you're going to be missing certain trades, right? You might miss certain trades, like in this case, in this setup. Let me just look for a setup that might have made you miss a trade. But you know, guys, you have actually missed trades, but it's not actually bad. Missing a trade is just part of the process. Let's say, yeah, this one is a very good example. This one is a very good example. So let's say in this case, whereby it would consider maybe the least part as your order block, right? Remember, let's say you had considered this area as your order block, and then this is where you find it, and then you have entered a trade, like maybe you're waiting for the market to come in somewhere like here, and then you see what has happened. Like market goes up so big, you'd be like, damn, what did I do? What was I waiting for? Okay, so that's actually the bad thing of defining your interest, because the more you define them, the lesser the chances of the market coming in your zone. But as soon as price comes in your zone, you're going to make money so big, like you're going to capitalize so big. So you're going to actually just be aware of what you're doing when you're trading. Just know that what I'm actually doing is a risk entry. What I'm actually doing is a perfect entry. So most people would actually go with risk entries because of FOMO, right? FOMO is fear of missing out. Like they're afraid that the price might not come in their zone, and then they go with a risk entry. The next thing they do, like they see the market going deeper, 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 right? So they'll be like, no, what is happening? It's gonna go up. So as soon as price goes deeper, they add more trades, right? They might add more trades. As soon as they add more trades, the price continues going deeper, deeper, right? Let's say the market is continues going deeper, 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 and then they add more trades, and then they find out the trade was not like couldn't play out, was not successful, and then they lose a lot of money. Why? Because they didn't wait for confirmation. So it's actually nice to wait for confirmation, because confirmation is part of risk management. It's going to help you to manage your risk, to preserve your capital and all that. But if you just go with risk entries, you need to be aware of the price that you're going to pay. Otherwise, reaching this far, um, we must have covered everything. Otherwise, reaching this far, we must have covered a little bit of, a little more of entries. So you need to have, you need to be aware. I know some of you might be facing this thing whereby you be like, should I enter now? Should I enter later? What should I do? What should I do? But the very important thing is to make sure that you are actually you actually know what you're doing, because that's gonna help you in the long run for you to succeed. Okay, so don't actually feel bad that the market has actually left me, the market has this, the market has that. Man, there's always going to be a trade that's going to play out, right? So if you just be humble yourself and put your stop loss there, your trade there, and your stop loss just below, wait for this market to play out. Yeah, it's going to pain you, but trust me, there's going to be a trade that's going to play out, right? It's going to be a trade that's going to play out so big, so nice, and you're going to like it. Okay, let's actually see. It's not not yet in that zone. But anyway, uh, thank you for watching this video, and I'm wishing you a very good day, and I'm also wishing you a very good night. Let's meet in the next video, in the next lesson, I should say.